Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope you all had a very nice weekend and a very nice day of trading as well. And in today's markets, guys, well, we had some fairly muted price action on the SPY and the QQQs, not putting in much gains at all, right? Well, just kidding, guys. The market is absolutely going nuts if you know where to look. Take a look at the risk on assets right now, guys. Bitcoin, we have to talk about Bitcoin almost smashing through $90,000. And just at the close of last week, we were at 75. This breakout of the all-time highs is the stuff of legends and is exactly what crypto is known for. Once it starts, usually it's like a freight train. It doesn't slow down, at least for a few weeks, right? Thereafter, guys, what else do we have going up crazy percentage points? Affirm, Coinbase, even a company like HIMS, right? HIMS was kind of beaten down for a while there, and now they're really starting to explode beyond the prior all-time highs of 2021. Companies like Square up 12, Elf Beauty up 12 after Elf Beauty being beaten down for the last 3 months. A company like Bill.com as well. Bill.com, they have a good product, but Wall Street did not like them for the last 3 years as they were underperforming the market. And now in just a few short past weeks, guys, they are now up 52%, right? A company like GameStop, the meme stocks are coming back alive. 10%, Chewy 10%, Tesla another 9% today at $350. It seems as though just yesterday, Tesla was at $217. Since that robo-taxi event sell-off, guys, the company is now up 62% and plus. SoFi, another big win again for today on SoFi. Seems like just yesterday as well. At the beginning of October, guys, SoFi was $765. They are now up over 90% from that point. And the list just goes on, guys. So you can see a common theme playing out in all of these names. The market is now rotating to being in a risk-on theme, and a lot of companies that did not get much love, especially the small caps or unprofitable growth stocks, they are now starting to resurrect from the dead after being down there for about 3.5 years. So it's going to be a very interesting market moving forward, guys. And my hopes at the end of this is to guide you through all of this so you guys are preferably not YOLOing your entire portfolios into Bitcoin out of the money calls and Palantir out of the money calls, right? So in today's video, what we're going to take a look at is number one, going to take a look at the rotation. What is the market doing right now? Is it healthy? Are we in pure absolute greed, extreme greed and FOMO right now? Or is there potentially more juice left in the tank? Number two, we're going to go through our major technical analysis rundown of our major stock market indexes, and then followed by our big tech names, because there were some big winners today, but big tech definitely were not some of those. So we'll take a look at big tech and how they're doing. And lastly, wrap it up with my portfolio, guys. Another new all-time high in the portfolio for this year, 78%. So we will take a look at how I am positioned leading into this week, the new positions, the old positions, all of that at the end of the video. So a lot to talk about today, guys. Let's jump right into the action. SPY up about 0.10%, QQQ down about 0.06%. So these two big market indexes not doing anything. But when I pull up the heat map, you'll understand what's going on here. We have this push and pull between big tech and the rest of the market. Today was a question of the rest of the market performing okay. We had a very mixed market today in terms of your large cap names. Big tech and semis had a little bit of a down day today, except for Tesla continuing to print those gains. Google also did fairly well. Look at consumer defensives, though. You can see a clear rotation out of defensives and into more of the small caps one that I showed you early on in the video. The industrials and industrials not doing too bad here. Real estate and utilities still being bogged down by the high interest rate yields on the 10 and 20-year yield curves, of course. Healthcare also very mixed day, but financials having some good performance. And once again, guys, this is the narrative from the Trump presidency, right? Lower corporate taxation rates, and usually the banks and financial institutions love those types of environments. So that is the heat map for today. Very mixed market, but I do believe, guys, big tech still does represent one of the easiest trades in my mind. If you are patient with it and you are buying the dips, you will probably be heavily rewarded over the next 3, 9, 12 months. Moving into the one-day relative, you can see fairly mixed market, right? Consumer cyclical, financials really outperforming. To the downside, technology and basic materials. The technology aspect that was down, of course, is the largest names, right? Microsoft, Apple, Amazon down, and all of semiconductors as well. So very mixed market. But where do we stand on the 1 week? Well, everything is up. So we can clearly tell that intraday, from day to day, you will have some rotations between the sectors, and that is very healthy rotation. As long as that rotation keeps up, we should be able to keep pushing up these markets a little bit higher. Now, before we get into more technicals, guys, Is this current market environment very healthy? Well, let's take a look here at the Fear and Greed Index and shed some light into this, right? Only in greed, not even extreme greed at all yet. Only greed because the levels are fairly mixed. In terms of the market momentum on the SPY, we are at extreme greed because that's a measure of how far we are away from the 125-day moving average at the all-time highs. But look at this, stock price strength, net new 52-week highs and lows on the New York Stock Exchange. We are only at 5%, guys. This is still a fear environment, nowhere close to being extremely greedy all across the board. Stock price breadth as well, with the McClellan Volume Summation Index here, also at a fear reading. The market breadth is not even as strong as it was earlier on in the year. Put in call options, that is extreme greed because nobody is buying protection right now. Everybody's fairly bullish on the market, but you can see not all areas of the market have been performing as well as certain others. The VIX is down, of course. Safe haven demand is extreme greed. Not a lot of people going for gold, not a lot of people going for bonds as well. And because the opportunity cost of those as opposed to equities right now is very high and very large, right? So as you can see, not a very clear read, right? It shows once again that a lot of the FOMO, a lot of the greed is towards certain names, certain stocks that have run tremendously. If you only look at companies like Tesla, companies like Palantir, companies like SoFi, right? Companies like Coinbase, they have obviously run an absolute ton, but the rest of the market has not run nearly close to that, right? So it's really just laser focused on certain names that have been kept somewhat artificially down over the last 3+ years. So we have to remove our focus goggles and take a look at the broad market right now. Take a look at a few more indicators that I have prepared for you guys, right? Here is the percentage of stocks above their 50-day moving average. As you can see of today's close, we're at 67%. A fairly bullish read in comparison to the highs of the year and does represent a fairly bullish market. But we are nowhere close, guys, to the highest readings that we can get when everything is pure bull FOMO mode and all industries are moving up at a very rapid pace. Here is 2020, the end of 2020 into the 3-month period culmination with February 2021. You can see we were blown up here at about 80, and every single time this year that we've retraced, this indicator has hit 80. So we need to see a lot more stock market breadth, overall gains, everything gains before we can actually hit those levels. Take a look at the 200-day moving average as well, percentage of stocks above the 200. This is only at 64, which is a fairly bullish read when we compare with prior years, but nowhere near to the levels of FOMO that we've seen before. This is the peak of 2021, guys, right? And you will see that at that point in time, 90% of the entire market was above the 200-day moving average. So that was really peak greed and peak FOMO. As of right now, I would say that we are roughly in line with where we've been prior times in the year, and even below some points that we were in December 23 and July 2024 as well. So we are getting up there, but we are not in truly overbought massive FOMO conditions. As I said, it is more in relation to certain companies, guys. Not everything is running crazy. As a matter of fact, you can find a lot of things that were down decently today, right? Some gold stocks pulling back, CELH, one of the legacy growth names, right? They didn't get any love today at all. Solar companies not getting any love. Even a company like Intel, other semiconductors today, they were the story of the year for pretty much the last year and a half. Where have semiconductors been, guys, over the last roughly 2.5 months? Well, I'll tell you, other than TSMC, AVGO, and NVDA, semiconductors have been nowhere to be seen, right? It's only those 3 names that are holding everything up. Everything else in the whole index is pretty much down, right? If I pull this heat map up and we put it on a 1-month performance, you'll see that for the most part, a lot of this sector, guys, let me move my shoulder across, right? There's the gains and the losses for the last month in semiconductors. Can you see anything other than pretty much NVIDIA, AVGO holding up, TXN because of their earnings, Intel as well coming out there too? But for the most part, guys, it's not very broad at all, right? So a lot of still pain points in the market to be had. And if you know where to go shopping, those could be the lagging plays that could be quite interesting. But it's really not it's really not a story of broad market, everything going up. As a matter of fact, if we take a look at the big tech list, we'll look at that in a bit. Look at all the big tech names here on the right, right? Apple down, AMD down, Amazon down today, Meta down, Microsoft down, NVIDIA down itself. Only Google and Netflix really coming alive, and Tesla and Palantir, of course, there. But you guys can see, right? healthy rotation, but it's really concentration into the small cap risk on narrative, guys. And moving forward, at least over the next 2-3 weeks, I want to pay special attention to the small cap trade, which is expressed by not only IWM, but also ARKK. Now, I'll be first and foremost to say, I am not going to be full YOLOing a quarter, a third, a half of my portfolio into these small cap names, but I think it would be a mistake to not have any exposure. Here is ARKK in relation to 2021. Do you guys think that even though ARKK over the last week since the Trump election, they're up 23%, you may think, well, I can't buy here, it's up 23%. Yeah, but look in relation to where we were in 2021, guys. This is maximum greed. This is maximum peak small cap FOMO, right? And that's measured as well by the IWM. IWM Russell, guys, we are barely cracking above the 2021 highs. As a matter of fact, I would not be surprised if we do get a small cap and risk on market rally through 2025, provided we get a no or soft landing scenario and no major recession. I wouldn't be surprised if the Russell can go up to 320 bucks a share, right? We're just at the very beginning of getting a green light. Now, obviously, a lot of Trump's policies that favor growth, low taxation come in and help that stuff, but we have not removed all of the uncertainty catalysts just yet, right? Still somewhat nervous about the jobs reports coming out in the next few months, still somewhat nervous about manufacturing output and economic output, right? So it's not as if we are in a absolutely clear market environment right now. Keep in mind, rates are still roughly between 4.5% to 4.75%, right? So we are not yet in a, let's call it financially easy situation right now where there's free money sloshing around everywhere and people have, VC funds and institutions have billions of dollars of free money that they can leverage with debt to just throw into equities, right? Not just yet, guys. Financial conditions are still relatively tight, right? So the 10 and 20-year yields are still relatively high. Can you guys imagine what's going to happen when these 10 and 20-year yields finally start coming down into 2025, guys? That is when you're really going to get the rotation to equities and into bonds as well. And that's when you're really going to get the full pure greed market FOMO. And that can last, guys. You guys know how long it can last. 3, 6, 9 months before hitting somewhat of a local top. And then it can just stay there, right? Unless we get negative year-over-year EPS, we can stay there for quite some time. So this is literally just the beginning, essentially what I'm saying. But I'm also not saying just because it's the beginning of a potential widespread bull market and risk on environment, I'm not saying to YOLO everything as well. Stay in your lane, guys. Respect your strategy. Be patient. Now, you can take 5, 10, 15% of your more conservative portfolio or more conservative trading strategy and try your hand at some of these growth plays, right? But please, the last thing I want from everybody is to go full port into just a few big growth names that have been up a lot, and then you guys kind of underperform or something happens to the company that you've chosen and the whole rest of the market is outperforming, your stocks get stuck, then you rotate at the wrong time, go into other things, and you're just constantly chasing, guys, right? We want to attack this with a very level head, and I'll be here every step of the way to give you guys my insights and the stocks that I'm looking for as well. So instead of doing earnings today, I figured I should do a quick little commentary on that. That'll be it for that portion of the video. Now let's jump into some technical analysis, shall we? So that was a little bit of trading psychology and how to make the most of the upcoming bull run, right? And I'll tell you guys the plays that I'm looking for and whatnot. We're still very early, guys. Even though these companies have rallied a ton, some of them, we are still very early. There's still a million other opportunities on the table for us right now. And my job is to guide you through each and every step of the way. So let's move on, shall we? So the SPY up about 0.10%. Where do we stand right now? We know the bulls are in full control. That is clear as day, right? So we are approaching as well this resistance line, trend resistance line. And in terms of the short-term timeframes, well, you can see that we're still significantly overbought, but we have not set the hourly downtrend just yet, have not lost the 12 EMA in a significant fashion. So the bulls remain in full control of everything right now. Monthly full control, weekly full control, and daily full control as well. To see a loss of that control, you need to see a flush of the hourly downtrend, flush the lows of today, right? Hourly downtrend. That'll be the sign of daily consolidation. When daily consolidation happens, guys, I will remind you, we are only looking for a daily higher low for further trend continuation. A nice area of support would be back down here, 586 down to about 580, where the moving averages are, where your prior resistance is. That should be current support. So a few days of pullback are not going to hurt this market. And even if we pull back 1 week, guys, Who's in control here? The bulls are in full control of this weekly, looking for a weekly higher low for further trend continuation. So that's everything for the SPY. Moving on into the QQQs as well. QQQs also looking quite bullish today, but the short-term timeframes, guys, are very overbought right now. We just took back a little bit of that. So be curious to see, can they set up the hourly downtrend, or do we just go for more and more gains? As of right now, the bulls are in full control until you see that hourly downtrend manifest. Only then will you know we are due for a leg of daily consolidation, and that at that point, you'll always be looking for a higher low. Anything at this point above 484, looking for a daily higher low for further trend continuation, and the area that I'd be looking for is possibly a backtest or close to the prior all-time high breakout region, which is roughly between 501 down to about 494, where you have this prior resistance, current support, and the two short-term moving averages sitting there as well. And I do still believe firmly that most of all dips will be for buying until proven otherwise, until we either get bad data or until we significantly give back a weekly move in a substantial fashion that could lead me to believe we're possibly going for a weekly correction as well. But no signs of that on the table right now, guys. We will take this as we do on the channel, one day at a time. You'll still see my favorite strategy, guys, is going to still be writing puts with 80% of my account. And then with the 20%, I'll be doing call options, leap call options, debit spreads, poor man covered calls, stuff like that, right? A little bit more risk on strategies with IWM leaps, ARKK leaps, Bitcoin leaps. I will show you guys everything. But once again, it'll only be with about 25% of my portfolio. The rest of the portfolio still remains my daily driver strategy, which is selling puts on my favorite companies below the market. Moving on to XLF right now. So XLF 1.42% to the upside, looking very good as well. The daily bulls are in full control at this point. New leg of the daily uptrend. Higher lows are set. And now at this point, if we get any pullback, looking for a daily higher low, anything above 48.74, looking for the daily higher low for further trend continuation. Now, in the event the bears completely engulf this and we lose the daily and even lead into a daily downtrend, is that big of a deal, guys? No, when in doubt, zoom out. Who's in control right here, right? The bulls are in absolute full control of this weekly time frame. So in the event we even lose the most recent rally, which is always possible, right? Just looking for a weekly higher low, anything above 46.13, weekly higher low for further trend continuation. I mean, one company that I'm in already is Berkshire. I think that Berkshire stands to be able to gain the levels quite nicely over the next at least 1 to 2 months. So I'm looking possibly for a 480, touch of the 480 to get out of my positions right now. Anything extra is of course just a bonus, maybe even due for a test of the 500 level, which would be an extra, 7-8% to the upside. But in these market conditions, they can definitely do it. Everything else, guys, is kind of ran a lot, unless you're trying to play something like a Charles Schwab with some short puts. Those have not run that much. But yeah, Berkshire is probably my best, the best look that I've had recently in financials. Moving into XLV and of course fintech, right? You guys know I've had Square and have been playing fintech a little bit more aggressively. So fintech, yes, but legacy banks and credit cards, I don't think that there's the best deals out there right now. Moving into healthcare. So healthcare down about 0.59. We know that healthcare has been one of the loss leaders in the market for the last 2-3 months, and today was no different. Once again, pulling back. So what is the context right now? We know we had a big sweeping series of daily downtrends right there, and now the bulls are trying to reverse this, trying to go for the daily uptrend shift. And as you can see now, we are due for a little bit of a leg of pullback, but that's fine. The bulls create a lot of space, getting rejected here, 151 to 150. It is a pretty decent level of resistance, previous support, now resistance, and all the moving averages are there as well. So no surprise that we get rejected at the area where we are contemplating getting rejected, right? That being said, looking for the daily higher low, anything above 146, looking for that daily higher low for possible further trend expansion. So not looking too bad on healthcare. Even on the weekly, guys, we need to push this daily uptrend a little bit higher, in my opinion, because you want to see this weekly, right, engulf the move a little bit more. It's been a very nice move on healthcare so far, but not enough in my opinion. We got up to about 50%, but not 618 or better. So the bulls do have a good chance of getting the weekly back in the two-step format, but they need to do it very, very soon and push, create more space, get above this level right there, sit on it, use it as support, and then give us a new weekly uptrend. One of the favorite companies I'm looking at right now is AbbVie after the most recent sell-off today. If AbbVie somehow comes back down into this area down here, 170 to about 165, I will be buying, looking for the monthly higher low for possible further trend continuation. They came down because, because of their one of their drug patents kind of fell through with the study as well. Classic case for a pharmaceutical company, right? You get these news headlines sometimes, but I will be a buyer down here on AbbVie, one of my favorite stocks, since UNH did not come back and pick me up. Got a little bit too greedy, was waiting for a retest of the 550 or better, missed it by literally a few dollars, and now we're all the way back at 625. It was a great setup. I admittedly got a little bit too greedy. The setup was as follows, right? Classic breakout monthly retest and run. It did give us a little bit of a retest after earnings, which I took and closed here, was happy, was looking for round number 2, didn't quite get it, was off by just a few dollars, guys. And then, of course, I didn't want to take it into the elections because, of course, depending on the candidate, you could have had 2 completely different outcomes, right? And this one, oddly enough, just ran with Trump. Healthcare was not supposed to be a favored trade in the Trump narrative. It was supposed to be a Kamala Harris trade, right? So this one was kind of a paradoxical trade, if you want to call it, but no excuses on my part. I told you guys I got a little bit too greedy, didn't want to position before elections, and then it just ran away. So not chasing up here, though. Moving into semiconductors right now. So semiconductors, the biggest losers of the day, and that's because more news once again came out this time from TSMC. Now for the second week in a row, they hit us on a Monday morning with some negative news. This time they said that they directed TSM to stop shipping advanced chips to China because they found some of their chips in Huawei cell phones, right? So is TSMC possibly circumventing international regulations against exporting chips to China? Maybe. We'll see if that's ever the case, but the news was that, and that news was enough to bring down the entire sector. I thought that it was a great dip buying opportunity, so I sold some puts on one of my favorite companies at a very attractive level. I'll show you guys that at the end of the video, but overall, semiconductors coming down a little bit here today, guys. Getting rejected constantly in this area of resistance, 260 down to about 250. The bulls still have decent support areas, right? Anything up at this point above 241, looking for a daily higher low to potentially continue on to a new daily uptrend. And once again, I'll remind you what we're trying to do. We're trying to find a base of support, right? Trying to establish somewhat of a weekly, either tightening range. They haven't lost the weekly uptrend. It's still a weekly uptrend, even if you set a new weekly higher low and go for it, right? But if they do come all the way back here, guys, we're just going to be kind of trapped between the whole 250 down to about 235 range that we've been kind of stuck in, right? The monthlies still look good. It's just kind of consolidation, looking for that next monthly leg higher. Maybe we have to wait till NVIDIA earnings to jumpstart us again. But all in all, I'm playing this. You guys must be familiar by now. I like to play this as the following, guys. I just look for which of the semiconductor names that I like have the biggest dips, and then I write puts under those names. So I'm just playing the volatility, playing the sideways action, farming some premium in the process. And now we come to the IWM, the good old Russell that for so long just hovered around and did absolutely nothing. Was it going to break? Was it not going to break? I was telling you guys, what did the Russell need to break these levels? It needed a green light for a risk on environment. And with the Trump election, we most likely have just gotten that now. So the Russell breaking a clear level, especially with that weekly close last week, guys, you can't fade this type of break. This is a break of 2021, big resistance that we struggled with for 3 months, and now we cracked it in one single candle. So it's going to be darn near impossible for the bears to get all this back without some severely bad macro data. And the only macro data we have this week is CPI on Wednesday. I'd be highly surprised if any number here, other than a ridiculous miss to the upside, is going to have any significant impact on the markets. And even later, Thursday producer price index, same thing. I'd be highly surprised unless this one comes in way higher than the estimates, is that's going to have a negative impact. And retail sales, same thing, unless it comes in ridiculously low to where people are nervous about consumer spending. But then again, you probably shouldn't be, because we got all the company earnings, and it said that yes, consumers are defensive, but they're still spending. We heard that from the banks, heard that from the credit cards, heard that from a lot of retail-facing companies with good strategies, such as Chipotle, such as Texas Roadhouse, and others, right? Some companies that have strategy problems like Starbucks are still struggling, but companies like McDonald's, companies like Coca-Cola, they've seen reductions in sales, but not falling off a cliff recessionary indication of sales, right? So we'll see how that goes on the Friday session. But all in all, IWM has the perfect market environment right now. Rounding the corner, everybody's predicting for a soft landing, so it could be very interesting to position with at least a little bit of the portfolio, guys, on any pullbacks, of course. So looking now very healthy. So at this point in time, guys, still looking for a daily higher low. At this point, we never lost the hourly uptrend, guys. Never lost the hourly uptrend this entire move. So we do not have any daily consolidation just yet. This is one single daily move higher. When we do start consolidation, we'll be looking for a higher low. Anything above 217, higher low for possible further trend continuation. And I'm going to move this up a little bit, guys. Well, actually, no, sorry, it's already at the highs, right? So any retest of this range, guys, 232 down to 225, I do believe is a golden buying opportunity for a positioning in the Russell for the current narrative at hand. But are we going to full port this one, guys? No, because we know there are still some risks at hand that could unwind this trade just as early as they started it. I'm not opposed to playing it, and I'm not opposed to playing it with size in relation to your portfolio, right? So I will be playing it. I will be looking to buy some leap calls on this and looking to write some poor man covered calls against that, probably on a weekly basis, benefiting from the volatility. But I'd be lying if I was telling you guys I'm putting my entire portfolio in this. I'll probably do, just a couple leap contracts, probably like 10, maybe even 15 grand worth between this one and ARKK. And then I'm going to throw in some Bitcoin as well. So hopefully that helps. Moving on to the Dow Jones. Lastly, Dow Jones also having one of their best days, or their best weeks rather, in recent history. So looking quite good. They had the daily downtrend. I'll remind you, when we had the daily downtrend, the reason I was bullish down here, why? Was because the bulls never lost the weekly uptrend. We were always looking for a weekly higher low. So this entire consolidation period, I was saying that this is probably a decent area if you want to position for the Dow Jones. And now we get the follow through looking very good. So in the event we pull back from here, you guys know the drill. Anything above 41.7, looking for the daily higher low for further trend continuation. And at the worst case scenario, if we lose the daily uptrend into daily downtrend, weekly consolidation, and the markets just unravel from here, we have so much space on the weekly, guys. Anything still above that 41.7, just looking for a weekly higher low for further trend continuation with a decent area of support below us. So that's everything for our major market indexes. Now, let's take a look at the one thing that everybody must be very curious about, which is Bitcoin. So Bitcoin just starting a new candle, as a matter of fact, just about 8 minutes ago at this point in time. And this rally has been ridiculous, right? Overbought on the daily RSI, but sometimes Bitcoin just doesn't care about your RSI levels. It can stay overbought on the daily RSI for a long time. And if you go back to the rally in 2021, you can see sometimes it just stays overbought, guys, right? So first entry in overbought conditions, we'll keep an eye on it. But similar to every single other thing, guys, unless you lose the hourly uptrend, you will not be in daily consolidation, right? Here, look at this, right? Hourly higher lows, break, and then we lose the hourly uptrend, but we do not set the hourly downtrend. And the bulls just engulf, get it all back. So you need to see a confirmed hourly downtrending pattern and loss of this 12 EMA with that hourly downtrending pattern to be sure that you're getting the daily pullback. As of now, no signs of that. Everything is looking fairly healthy for now. So I wanted to position early on this morning, guys. And even on Friday, I was anticipating, even myself, I got caught a little bit off guard with the size of this move. I was expecting early this week with the market rally that we might get a little bit of early week pullback. And that is when I was willing to open up the leap call contracts using BITX as a proxy into this location here. I wasn't even asking for a retest of the prior highs. And we literally just ran away. Even this morning, I hesitated a little bit to buy them at the open, as you can see right here, right? I just did not open them out at the open. I figured, we have a gap up open on the S&P. Most likely, a lot of those are for a sell-off criteria after a big volume and a big move up, culminating in a gap up open again. Usually, you tend to get a little bit of pullback, and we did in the overall indexes. However, it did not translate to Bitcoin, right? So sometimes it's very difficult to predict, right? Crypto, because crypto obviously is pure supply and demand, guys. Sometimes there's just no rhyme or reason behind the moves. Obviously, there is now rhyme and reason behind the moves, but it's very tough to estimate the size and volatility and speed of the move sometimes. However, I will reiterate that my end of year 2025 target for Bitcoin is sitting at roughly 120, 125K. I do not think that is that far-fetched at all for this type of asset in this type of market, especially if you get a very bullish 2025. And the one thing is, if we do not get any recession, I think 120, 125 is definitely on the table at that point. As a matter of fact, you really don't, other than us right now, you guys watching the video, right? We're all in an echo chamber. You guys probably watch a lot of financial content, but I will tell you, right? My friends, my family who are not in the markets recently, nobody is asking me about Bitcoin. There is no overall FOMO, at least not to the extent that was back in 2021, right? In 2021, when we started breaking the 26 all the way up to 40, 50, everybody and their mom was talking about Bitcoin and crypto. Now it seems as though we've just broken through 60, 70, 80, and nobody cares other than some media channels that talk about it, right? Here's the headline from CNBC. Other news stations have Bitcoin in the headline. CNBC, the Dow, right? All they say is the Dow. Trump enthusiasm continues. Here they talk about the Dow. Here they talk about the banks. Here they talk about GameStop. They talk about Tesla. They talk about big tech. And then at the very end, they give one line. Bitcoin surged above 87,000, boosted by hopes of deregulation. Crypto-related stocks, Coinbase and Mara rallied 20 and 30% respectively, right? Nothing more than that. Nothing more than that, guys. So I'm telling you, there is literally no FOMO other than us who are in the space right now. And it's kind of like an echo chamber where everyone you might know in the space is talking about it. Everybody outside the space is not talking about it, guys, at all that much, right? You're starting to hear little bits of it, but it seems as though nobody cares, especially in relation to how much people are talking about it back here, right? So that's just thoughts that are on my mind right now. And I will be looking to play these pullbacks. In terms of the technicals, guys, full bull control, right? Beautiful bull flag accumulation by the bulls. On to weekly leg number 2. And if you want to do some little analysis with the fibs, right? Well, just guys want to know some price targets, right? First price target right now is going to be around the 88 mark. We just hit the 1618. The next mark is about 112. And then we obviously move a little bit higher on and on throughout the levels. But usually when you get a break of the range, you usually can get 1 or 2 times the break of the range, which would be here or all the way up here. So my target now further on in the year, a couple more monthly candles after this, even if we get a few red candles in between, some hesitation, I think that 2025, provided the economy doesn't absolutely fall off a cliff and everybody loses their jobs somehow, right? I think Bitcoin is poised to rally a little bit more. And I will be looking for any and all pullbacks, guys, at this point in time to acquire some leap call contracts. Yes, even up here, guys, even up here, I'm still very bullish on this asset, but I will be putting a lot of time on these contracts. And once again, I will be using probably BITX as a proxy, or perhaps even some of the miners that have been left behind, right? Such as Mara. Mara just came alive today. Only today, guys. They have been range bound for so long, and we still have not hit the highs that we had earlier on in December or February this year when Bitcoin put in the first leg, and we're still a very long shot away from being all the way up here in the 70, 75 range. Miners have just now become profitable, right? I'll show you guys some updated charts, but this is, I think, the lagging plays. I mean, you could play Mara, you could play Riot. My personal favorite is Mara, but even Riot, right? Far cry away from the highs of 2021 and 2020 when we really got the massive crypto FOMO, right? So I still think there's a lot of juice left on these, but obviously if you're looking at the micro strategies, they've blasted on towards the top. Coinbase, the other proxies have rallied significantly, right? So I'm trying to play the underperforming proxies right now, or just using the 2 times leverage ETF with BITX in an upswing. So I'll be looking to play any and all pullbacks and probably using it to, so I'll buy some, here's how I'm going to do it, guys. I'm probably going to buy some leaps on a pullback and then continuously write short puts under the market, gather some premium, reduce the cost of those leaps. And also when I have those leaps, I'll be looking to every single week write poor man's covered calls way above where we currently are, because the premiums in those contracts are very, very juicy. So I'll be buying the leaps, but then writing premium under and writing premium above against to reduce the cost of those leaps, because I know I'm buying them high right now, guys. Trust me, I know, right? So that's just how we're going to position for the near-term future in Bitcoin. And of course, Ethereum is moving very, very, very nicely as well. Cannot not talk about Ethereum, right? Smashing through a big level, but running into another one. We're running into the 34, 35 quite quickly, but we did smash through this 28 to 30 as if it was not even there. So looking very good. The weekly full breakout mode too. So nice new weekly uptrend, guys. First, this is part of the first series of weekly confirmed uptrends since all the way back here, doing the same thing as Bitcoin. So any and all pullbacks back down here into the roughly $3,000 range, I think is a great buying opportunity, guys, for the potential revisit of Ethereum highs of this year and maybe onto the all-time highs as well. If Bitcoin cracks $100,000 by the end of the year, I would not be surprised if Ethereum is at least 4,000. So that's pretty much everything. And just keep an eye, guys, on your Bitcoin dominance, right? Bitcoin is still the dominant pair. It had a little of a dip. We were looking for the ETH BTC breakout, right? Looking for the ETH BTC breakout, but still now back to complete Bitcoin dominance, outperforming. So there'll be that rotation, but eventually Bitcoin will hit a relatively local top, then probably consolidate for about a week or two. And that is going to be a period where a lot of these altcoins really start coming alive and juicing, right? Moving into Apple right now. I mean, so many of them, guys, so many of them, like they've made big moves. But in relation to where we are, like look at the levels that we hit in 2021, guys. I mean, Solana's up there now, but a lot of other things, right? Link. Like we're very, very, very early, guys. Very early. Dogecoin hit 70 billion dollars in 2021. We're about halfway there now. Look at Dogecoin coming back alive in the last roughly 3-4 weeks of trading at this point. But so many other names. I know you guys don't trade a lot of these, right? So many other names, you know, the second tier cryptos, right? The layer 2s and stuff like that. A lot of them just haven't ran. There are some, yes, but a lot of them just haven't ran. Same thing with crypto, right? It's kind of just localized right now to a few pairs here and there, but there's a lot of opportunity there as well if you know what to look for. Now moving into Apple. So Apple up, down about 1.2%. I mean, no change here, right? Daily downtrend is known right now. Trying to set up for the daily higher lows and go for the daily trend change. Above us is resistance 230 down to about 225, and below us the support 220 down to about 214. Still range bound until I get a break of 228 to the upside, confirming a daily uptrend, confirming a weekly low as well. And then, you know, even at that point in time, we are still trapped in this weekly range, right? The bulls are still trying to find a local bottom to this weekly and put in a big leg of weekly expansion. Now, Apple is not my favorite bet right now for risk to reward just because the valuation is relatively high and the growth concerns for revenue are real as well. Very low revenue growth, right? However, it is Apple. They are a very defensive company. They're a legacy company. They do a ton of buybacks to artificially maintain the share price. Everybody knows that, right? And in my opinion, if SPY and QQQ and the rest of the market keeps running, Apple will run as well. That is a no-brainer. So if you're very bullish on Apple and you like the company, could be a decent opportunity to write some short puts. 219 down to 214. Myself personally, I'm waiting more for around 210. If I can find 210 or better, that is the area that I'm willing to play Apple a little bit more aggressively. But as of right now, guys, the tale of being trapped between two levels, overhead resistance and our below support with no clear trending direction right now. And even on the weekly, just sideways accumulation. So, I mean, you can make the most of the tightening range here and play some credit strategies if you want to. Moving into AMD right now. So AMD as well was down as part of the larger semiconductor pullback, but AMD is going for something right now. We'll see if they can do it, right? So daily big downswing. We know that in the context of a weekly uptrend that's been struggling, right? They do have a weekly higher low right now, and now it is entirely up to the bulls. Can we save the weekly uptrend and go for another leg higher? It's all in this daily chart, guys. Take a look at the daily bounce. The daily bounce was not the best, right? It was not the best, admittedly. It only got up as high as 38.2%. Now, that does give the bulls a chance to reset into a daily uptrend, but it doesn't give them the best chance as if they would have bounced 50 or 618 or 80%, right? Then you have a super clear probability of getting that follow through and reversing this and continuing the weekly uptrend, right? But as of now, the bulls are trying for it. We will wait to see if they can do it, right? Keep an eye. They lost the hourly trend, and now we are trying to get it back. If they can get it back and smash the highs of last week, you will have a first official daily uptrend, and then we come into this resistance zone, 154 up to about 162. In the event we roll over for further weakness, guys, I will be interested in playing some AMD stock by using some short puts, below 140, 135 down to roughly 130, as low as we can get. I like AMD as an opportunity down there, guys. Admittedly, it's not one of my favorite names in the market right now, but we cannot fade the valuation, guys. They are going to be having some very good growth over the course of 2025. But as we've seen before with AMD, this stock does require a little bit of patience. I do think it'll be the case of rising tides lift all ships. I would be highly surprised if the SPY, the QQQ, the rest of the market launches upwards and AMD is left behind. So there is a trade here, guys. There is a definitely trade to be had in AMD, but we'll probably have to be a little bit patient with it, right? Moving on to Amazon right now. So Amazon down about 0.64%. Amazon not looking too bad on the day either. So coming down, and now what are we looking for, guys? Well, we're just looking for a daily higher low. We know what happened last week. We got the all-time high breakout looking very solid. So now we're looking for the daily higher lows. Daily consolidation, right? And I tell you guys this all the time. Watch for the loss of the hourly time frame and then consequently the loss of the 12 EMA. We did both those things. You know that daily consolidation is underway. So now you wait till the bulls recapture the hourly, then you will know your daily higher low is set and most likely you're due for another leg higher. Now, where's maybe the maximum level we could possibly pull back to? 200 down to maybe 198, this rough zone right there. 200-day moving average, prior all-time high resistance. That would be the most logical point for the bulls to kind of pull back in the event that they need to. Even if you lose this daily uptrend and set the daily downtrend into there, not that big of a deal, guys. Who's in control here? The weekly bulls are in full control, tons of space. Anything above 180 is just looking for a weekly higher low for further trend. So even if we break below the 200 and come down here, 195, 196, Are we nervous? No, there's so much space, guys. Anything above way down here, just for a weekly higher low for further trend continuation. So I will be buying the dips on Amazon. I already took a leap contract in my portfolio today. And if we revisit under 200 or close to 200, I'm writing some short puts, hands down. I'm going to be getting aggressive with Amazon. My target for end of 2025 is about 230 to 250. So we still have a ways away until we get there, roughly another 10, 15, 20%. And that's conservative for me. But if we pull back under here, this is where I'll throw my second batch of leap contracts at this stock. Moving on to Google right now. So Google up 1.17%. Google holding up the gains really, really nicely, right? So we know the context is this continuation of the daily uptrend. So we'll kind of let them do it. If they can break 184, you got the confirmed daily upswing leg in motion right there. And as soon as they kind of taper off out of this growth leg, you'll just be looking for a daily higher low. Anything at this point above 189, looking for that daily higher low for further trend continuation. And if they drop off from here, we're looking for the same thing, right? Just daily consolidation. And the downside resistance target, support target is 175. This whole zone, 175 to 170, I'll be writing short puts there all day, guys, all day. I want Google down there. The valuation is relatively cheap. As you can see, the PEG ratio only at a 1.33, and they're such a profitable company as well. We won't look into those metrics right now, but all I want to show you is EPS, perfect, revenue, perfect, ramp curve as well. And look at the analyst price targets. They're all significantly above the current price. So that is why I will be buying any and all pullbacks here, because they will also be a weekly higher low for further trend continuation. So I'll be looking to aggressively buy down here, either shares, call options such as leaps, or just writing some short puts and not minding being assigned. I will be writing aggressively with it. Moving on to Meta right now. Meta down about 1.05%, but it's okay, guys. In the grand scheme of where Meta is, the daily is a little bit choppy, admittedly, right? We're trying to go for the daily trend change right now. We'll see if they can do it. That'll be a break of the Friday close, essentially. You would have the new daily uptrend. We're protecting the short-term moving averages fairly well right now, but the key here is held on the weekly time frame. Gorgeous weekly uptrend right now. Got the weekly higher low, and now we are going for weekly trend confirmation, guys. We'll see if they can do it, because as of now, all of these candles, they haven't broken the highs and really the lows of the previous week. So even if we put in a red candle this week, guys, it's still just weekly consolidation. We're still looking for a weekly higher low, anything above 495, looking for a weekly higher low for further trend continuation. So we'll see if we can get it. One thing's for sure, if we come back down 550, 530, I'll be looking to buy Meta there. But right now, kind of when it's in between, I'm not the biggest fan of this one, even though my upside targets on Meta are 640, 650 for the next 6 months. I'm just being a little bit more patient on this one as a whole. Moving on to Microsoft right now, but it's looking very good, guys. Looking very, very, very good. I have Meta in my long-term portfolio. I'm not selling any shares, right? And even if you want to go for a little bit of a swing trade right here, there is a swing trade right now, guys. If you're going for the speculative daily breakout right there, which is what they've created with the space, there is a trade to be had here. Just be mindful the stop loss goes below here, because then you kind of invalidate the whole breakout scenario, right? So just keep that in mind. Now moving into Microsoft. Microsoft also not looking too bad. 1.07% to the downside. Why I say it's not looking too bad? Because they're just not doing anything, right? We're still range bound. Where are we in the grand scheme of things, guys? The bulls put in a very decent bounce, got rejected here at classic resistance, 433, down about 425. It's been acting as resistance a number of times over the course of this year, so it should not come to a surprise for anyone. Nice bounce, looking for a daily higher low. Anything above 405, looking for the daily higher low to get the daily trend change in motion and get this weekly uptrend also in motion too. As of right now, it's just been sideways, same as over here, sideways, right? And of course, I'll say this, at least for the next few videos, I do understand there's a big head and shoulders here, guys. Trust me, I know. But it's all about the context of things, right? Do you guys think that unless the S&P and the QQQ have a 10, 15, 20% correction, do you think Microsoft is going to, out of nowhere, have a 10, 15, 20% correction just to fulfill the head and shoulders pattern when the rest of the market is mooning, risk on assets are mooning, the SPY and the QQQ are grinding higher? Do you guys really think that Microsoft is going to go for a 15, 20% pullback just because it has a head and shoulders pattern, all while it's been improving profitability, improving its fundamentals, guys, right? Improving EPS, every single quarter, improving revenue, every single quarter, improving free cash flow? It's not going to do it, guys. The context matters, right? So the only time this will fulfill the prophecy of the head and shoulders will be if you have an overall market sell-off because of some big macro catalysts, and you see the S&P and the QQQ start to really plunge. The risk on trade gets completely undone, right? only then will you see Microsoft take the 15% sell-off that this head and shoulders could possibly warrant, right? But as of now, I'm giving the bulls the benefit of the doubt, and I am buying these short-term levels. And if for whatever which reason we dip a little bit more, I'll be adding more short puts down here, 415, 410. I'm getting a bit aggressive with it now, admittedly, and even down here towards the lower end, guys. Leaps. I'm a big fan. I opened my first ones back here. If we drop a little bit more, I will open some more. And if we come down here, guys, I'll probably throw some more contracts at it as well. I think Microsoft is poised to go to $500 at least within the next 6 to 9 months. The speed and velocity and all that stuff is obviously anybody's guess, but I'm not too far off, guys. Many analysts, the average price target is 500, right? So I'm not being too ambitious with that, I don't think. Now moving into Netflix. So Netflix, another green day for Netflix. No surprise there. Looking very good ever since their earnings breakout, right? Clear daily uptrend, nothing to see here at all. As soon as this move is finished, looking for a daily higher low. Anything at this point above 750, higher low for further trend continuation. There's nice support down here, guys, for the full breakout retest in the event the bulls need to pull back all that direction. But also, the weekly is looking fantastic, guys. Looking absolutely fantastic on Netflix. Bulls in full control right now. But the risk reward, in my opinion, guys, is not the utmost best on this stock. We're beyond the all-time highs. We're pushing. The valuation at 715 wasn't that bad, but up here at 800, about 10% higher, it's getting to about 1.7, which is also not that bad, but I wouldn't say it's the best deal in the market. Am I holding my long-term share Netflix shares? Absolutely, not selling a single share. But am I adding up here? Not really, right? Now, moving into NVIDIA down 1.61%. Not the worst day for NVIDIA, but obviously, when the rest of, when you have names that are flying like this every single day, Palantir is going up, Tesla's going up 10%, you kind of feel that, well, where's the love for NVIDIA, right? Well, the thing is, guys, like, NVIDIA has been carrying the market for a year and a half, right? There was days where this entire heat map was red. It seems like so long ago, but it actually wasn't. It was only about a month ago, right? A month, 2 months, 3 months ago. Some of these days, the entire market was red. Even the entire semiconductor list was red, and NVIDIA was up 3-4%, right? So you can't blame them right now for not being the stocks that are kind of holding the market on its back, right? Very healthy price action from NVIDIA, all things considered. It's a clear daily uptrend right now, right? Well, at least they're trying to set it up. There's a daily downtrend right here. We set up the weekly higher lows. We're onto a new weekly leg. And now the bulls are just looking for a little bit of a breather, right? A lot of space here, looking for the daily higher lows. Anything above 132.50, looking for the higher low for possible further trend continuation. A lot of support coming into us now. The moving averages are there as well. So we'll see what happens with NVIDIA. One thing's for sure, if we really drop the levels here, I'll be looking to write some short puts as close as possible to 130. Maybe, 135 all the way down to 130. Not opposed to be picking up a few NVIDIA shares, especially leading into their earnings as well. Weekly bulls are in full control at this point in time. So I like the stock right now. It's just tough for me to buy it here and full portfolio buy right before earnings as well and go for the clear moonshot scenario, right? I'll still be conservative, still write my short puts. And if they pick me up at my desired entry levels, I'll hold the shares, no problem at all, right? Now, moving into the other one, which is going to be a big one, guys, and we're going to look into Tesla. So one of the rocket ships, the second rocket ship is coming up soon, Palantir, right? So Tesla, absolute monster move by Tesla, guys. They got all the way up to 358. I mean, just in a few short weeks, right? The robo-taxi event, everybody was so bearish. Then they had their earnings, reignited some bullishness, gave back a lot of their earnings. People turned bearish again, even though I was telling you guys, it's clear daily uptrend break, right? They broke above a big level looking for the higher lows, and we may have a good shot at cracking this 265. And if we do it, we're going to crack 300. Well, not only did they crack 300, they cracked everything in one clean shot, looking absolutely amazing, guys. We are now, this is crazy, right? We used to be just a few short weeks ago, 48% from the all-time highs. We are now simply only 15% away from the all-time highs. Monstrous move by Tesla, guys, but very tough to chase up here. Even though it's Tesla, even though we know they can go on these crazy, monstrous rallies sometimes, you guys have seen it time and time again, where Tesla can just rip people's faces completely off. This is what this stock is known for, right? It's one of the first to do it. When NVIDIA ran, people compared it to the Tesla run of 2020 and 2021, right? They're one of the biggest and one of the best to ever do moves like this. They pioneered the moves like this. Well, obviously not, I'm exaggerating, right? But at least in the last 4 or 5 years of recent memory, this has been one of the biggest winners all the way back then. It's just that it's been muted for quite some time now. So Moral of the story, daily bulls are in full control. Anything above 239 on a pullback, looking for a daily higher low for further trend continuation. And I might be looking to buy the pullbacks at this point, guys, because I think the narrative for Tesla is quite clear right now. They will stand to be a winner, at least in the next 3-4 years, especially under a Trump presidency. So that being the case, any pullbacks, guys, I'll be looking to write some short puts. I know it's expensive right now. 310 down to about 290 is my sweet spot looking for the short puts. But short term, guys, watch for the hourly. If you do not lose the hourly time frame, the bulls on the short term will continue ripping people's faces clear off. Very tough to be shorting the tops, guys. I know you guys love trying to short the tops, but you're better off shorting the tops with some confirmation. Wait for the hourly downtrend confirmation. You can then enter the trade here. The stop loss goes above the confirmed lower high, and then you go for downside continuation. Constantly trying to pick the tops every market open and getting blown away by the bulls every single time, guys, is a recipe to lose your entire account. Trying to pick the tops and tops and tops and tops. You thought this was the top, you're underwater, right? Or you thought this was the top, you're underwater every single day, guys. So just don't do it. Wait for the time frames to confirm, and then you can possibly go for the technical short. So that being said, I will be looking for the technical long because the bulls control everything now. They control the monthly time frames. Clear monthly uptrend at this point, which has not been the case, guys, ever since 2023. So you have to take notice of a clear technical pattern shift on the longer term time frames. Your MACD is finally bullish after being bearish for 3 years, guys. 3 years. We've now been bullish for the last 3 months. So it's coming, guys. I'm telling you guys, Tesla is going to severely upset some people over the course of this cycle. I'm telling you guys, it's going to get real. It's already getting real right now, right? But you guys know this better than anybody, right? If these growth stocks, right, or sorry, this is the wrong list. If these growth stocks can put in numbers that are crazy, that most people, scoff at, they say they can't possibly continue, right? Just go back to this rally right here, and whatever number you think that these growth stocks can hit, double it, guys. And that is possibly what they can hit. As I showed you earlier in the video, we are not even close to broad market FOMO, not even close to broad market extreme greed. People are not even talking about Bitcoin that much, and it's still already 90K. So I'll give you an idea. And interest rates are still high. Financial conditions are still relatively tight, guys, right? So just keep that in mind. Whatever number you think that Tesla can't possibly hit, it can probably go 2 times that before people start to really start scratching their heads. The same thing as it was back here. Tesla has Tesla has 1,000 PE ratio. That's what people were saying back here when it crossed 1,000, right? And then they had to split the stock. And then what did it do? It ran another 3x in people's faces. And then it ran more. You know what I mean, guys? Like these things, if, valuations were a concern, the last 3 years, everybody was focused on valuations because we had a poor market, right? Everybody was focused on growth in EPS, growth in revenue, right? But I'll remind you, in markets where valuations don't matter anymore, when you get pure greed, pure FOMO, pure bullishness all across the board, well, if you guys were wondering how certain stocks could stay cheap for so long, like you've been wondering how a stock like SoFi can stay so cheap for 3 years, right? How stocks like PayPal, how stocks like Square, how other stocks, I could go through the list, right? How many stocks can stay cheap for so long? Well, do not be surprised if the flip side happens, if stocks can stay overvalued for longer than you expect as well, right? It works both ways. Always remember that too. So that is the short form on Tesla. We'll take this 1 day at a time, but I will be looking to buy these pullbacks somewhat aggressively. But once again, not full YOLO, not with my whole portfolio. I have a ton of Tesla shares in my long-term portfolio. I'm not selling any. I'm not adding any up here, but I will start swing trading this stock a little bit more aggressively. And now lastly, Palantir. Palantir as well, right? This one, same concept. We've been saying this for a while. The stock is extremely expensive. It does not matter. You guys know this best, right? Just go back to 2021. And so many of your favorite stocks, right? I mean, unprofitable companies, guys, were hitting ridiculous. You guys remember how crazy it was, right? Don't you guys remember, Plug Power, right? All these companies trading at ridiculous valuations back then they started being ridiculous back here. In all honesty, they started being ridiculous back here. And then it went on and on and on and on and on. Like stocks like these, even stocks like NEO, right? Where people thought it was going to be, the next Toyota, apparently. Like these rallies, guys, are sometimes absolutely ridiculous. Like Lemonade wasn't even profitable back in the day. Look how much they ran. Look where they are now. You may think that, wow, this stock has moved like, let's say, 86% from the bottom. It must be topped out, right? Like, guys, like it can get really, really, really crazy. So as I said, we're still early, but don't FOMO full portfolio these things. Approach them with a logical mindset and filter through them. Now, bringing us back to Palantir before I get too set, but I think it's important for us to talk about these things today, right? I could have just done a 20-minute video, told you guys the gains are there, shows you guys the positions, and that's it. But I like to talk a little bit more, give some context to a lot of these things, right? So Palantir, the context is the same. We know the stock's expensive, but we know that we're in the market environment right now that it can stay expensive, right? We're probably not going to get the stock cheap again. If you're waiting for Palantir at 30, essentially what you're waiting for, guys, is a total market crash. And at that point in time, Palantir is going to be an opportunity, but everything else is also going to be an opportunity too. It's probably not going to happen, guys. If you're willing to play momentum on this one, I'm all for playing momentum, but at least we have to wait for some short-term daily pullbacks. And as of now, we have not gotten any of them, right? It's just proper risk management. I mean, if you would have not listened to me and not waited for a pullback and longed every single one of these days, you would have won. And that's the market environment that we're in right now. And that is perfectly fine, especially if you're day trading, right? But it's not a good habit to build, guys. I'm all about building long-term habits for all types of markets. If you would have tried to take these trades, just 4 months ago, 3, 4, 5 months ago, guys, you would have gotten wrecked. Now, just because the market environment has shifted, well, obviously that shifted. So just try not to build bad habits, right? It's okay to chase sometimes. I'm not opposed to it. Just try your best not to build bad habits for it, right? Don't get used to this always being the type of market conditions that are always going to be around, right? You guys remember, like this whole... people often forget, right? This was painful. It was painful to be a Palantir shareholder back here. It wasn't doing anything. It was even more painful. I can tell you because I was in this one, right? It was very painful down here. Very painful. Up here, it was less painful, but it was still boring. Here, it was less painful, but it was still boring. And now everybody's excited, and now everybody just screams Palantir at the top of their lungs, right? So, everything in context. That being said, looking for a daily higher low, anything above 41, looking for a daily higher low for further trend continuation. Everybody, all the bulls are in control here, full weekly bull control as well. So waiting for that pullback, very extended on the weekly at this point in time, very extended on the monthly RSI as well, 83, and of course, very extended on the daily RSI. So just be very cautious playing this stock, guys. I beg you. Now, moving into the portfolio. All right, guys, so looking at the portfolio with the new trades that we made today. So I'm just going to go over the new trades. We did a full portfolio rundown on Friday's video for about 15 minutes. If you didn't see it and want to review why I have some positions that I will not explain today, just go look at the Friday video at the end of the video. Today, what we opened, guys, we opened an Amazon leap call as promised, 185, which is the roughly 75 delta. We paid them roughly around the current share price of Amazon, guys, roughly around 206. I'm going to ride this one. As I said, under 200 is when I will add another call contract on those. And if we rally substantially from here, that is the only time you'll find me writing poor man covered calls on those leaps, right? In other news, the rest of the wheel trades are still here. We still have the Enphase 63 puts. We opened those last week. We'll see if we get assigned at 63. So far, it is looking like we're getting close to being assigned. We'll see. I like Enphase at these levels. We opened some new trades as well. Mara, the 19.5 puts. Why I chose the 19.5s? Well, you will see right here, we are getting at least 1% in weekly premium for these. I got them for 19 cents. Mara 19.5s, guys, would be giving back the entire move of today's candle. Highly unlikely scenario, but if we do, for some which reason, give it back, I will be there to buy those shares. If not, I just get to collect some juicy premium. Still no big call contracts on these for me, but I will be looking to add them over the course of the week. If we get a significant days, 1 or 2 or 3 days of consolidation, I will be looking to add some call contracts on the long side for those. In other news of what we added to the portfolio today, guys, we did some Shopify trades. So I took some Shopify trades for earnings, 69 and 67 puts. The expected move for Shopify, this is a 2 times standard deviation move, which I explained yesterday in the top 5 options video. This is the strategy that I like to use for earnings. The expected move is 13%. So you can see my 67 and 69 strikes respectively are roughly 2 times that expected move. 69 is about 23% away. 67 is about 26% away. So roughly 2 times away and in a very large area of weekly support. As you can see right here, I always make sure that they're in very large areas of weekly support. So that is pretty much everything for Shopify. Now moving on down the list. So as you can see, we only have a few more that we added. We added SOXL for the drop on semiconductors. I'm going to be looking to get aggressive with SOXL puts, 27.5 all the way down here. If we come down there and assign me, perfect. I will be be riding the wave. Semiconductors have been roughly muted. SOXL, the leveraged version, 3 times leverage version of the ETF, has been muted as well. I'll be looking to play this a bit aggressively, and if I get assigned, I will hold the shares and wait for the semiconductor rally. But all in all, decent premium here, guys. Well over 0.5% and with a decent margin of safety. Now moving on, we also wrote some covered calls on Square since we have the leaps that are up fantastically now, 118%. We chose to write the $88 calls, which is just above the expected move. We got 43 cents for them, roughly 0.5%. We will see how we can manage the position over the course of the week. If they, of course, end the week above 88, I will close them at a loss. But for now, just looking to benefit from the 12% update and get a little bit of premium back in my pocket. And lastly, down here, we have the TSM wheel trade that we opened today as well. TSM 185 puts. We got that on the drop of TSM when it was down roughly 4% in the early morning. We got 84 cents, which is not a true 0.5% rule, but it is a very good level, guys. It was between that and the 187.5s. The 187.5s, in my opinion, were a little bit close, especially if you got more bad semiconductor news, more China news this week, could drop us there. So I went with the 185s, slightly more conservative, but still in my good old breakout retest of the prior all-time high levels. So that's the level that I'll be looking to get. If we get a sign, no problem at all. Love the company, and I will play it as a normal wheel. So that is all the strategies that I've added today. Everything else in the portfolio is largely up to the upside, and most of the leap call contracts that I put in this portfolio, guys, over the course of the last 2-3 months, let's say, they've all been doing fairly well, right? In terms of the leap calls, the squares are up, the Disneys as well that I told on the portfolio, just a few short months ago when we bought these with the shares at 85, those are up very nicely. The Google leap call that we got at the bottom, or the 150s, is up 84%. The Micron calls that we're still holding, they're up nicely. The Intel calls as well. So I'll be looking to add to these leap call positions as well and build more new ones around Bitcoin, around ARKK, around IWM, more of the kind of growth stock asymmetric bets, right? Trying to go for the big P&Ls and things like that, but I'll be keeping the position sizes relatively tame, right? You're not going to see me throwing 30, 40K in IWM, even though it can work out, guys, it is still risky, right? We don't still have a full blue sky, green light scenario to where there's no risks to the economy whatsoever, right? So we'll still play these a little bit cautiously, and we're just going to keep compounding these gains, guys. Compounding these gains, using the wheel, using these leap options and call debit spreads, and just playing them as, a good midpoint between conservative and aggressive, right? A very balanced approach. Most of our portfolio will be the conservative wheel strategy, which is kind of the daily driver of the portfolio. And then we will look to juice some of those returns with not only very stable companies with leap calls, such as Google, such as the Amazon that I bought, such as the Microsoft I bought that's in a different account, right? We have those, but I'll be looking to complement those conservative and high quality plays with a few risk on pure, speculative plays as well, risk on small cap plays too, right? So that's pretty much how we've marked up the portfolio for now. And that's everything I had for you guys in today's video. So spend a bit of a time on this one, guys. The next videos for the week will be considerably shorter. I'm going to make it a mission now that we're largely through earnings. I'm going to make it a mission to keep these videos under, between 30 and 40 minutes if I can. I know hours is a bit long, so this is going to be the last of its kind moving forward, guys. The last of the 1 hour long videos. It's been fun so far, but now I kind of need to optimize for the algorithm. So I'll be giving a little bit less details, but you guys know me. I'll still be giving the important things and not, talking about useless stuff, right? I'll still give all the context, all the utility, the perspective, where I think things are going, focusing a lot on the trades, stuff like that. But we're going to try to keep these videos under 30, between 30 and 40 minutes, just to be more favorable, to attract more viewers to the channel, because I know, anything about 45 minutes, an hour starts getting a little long for most people. But I appreciate you guys watching so far, as usual. Love you guys. Hopefully you guys have had a very good day of trading on the channel. If you did, consider dropping a like on the channel. Would appreciate it for the growth of the channel too. Consider subscribing if you're new here. We do these every Monday through Friday after the close. And lastly, guys, if you have any questions, always feel free to leave them down below in the comment section, and I'll always answer within the first 24 hours. Anything you want, stocks, options, macro discussion, growth stocks, anything you want, leave them down below, and I'll do my best to give you a second opinion without it being financial advice, of course. And in the event that you guys want access to, of course, I have to, just present the opportunity, right? In the event that you guys want to be part of the Discord, where I do give all of my live trades, here are the rundowns, here are the essentially trade recaps from last week's, ever since I've opened the Discord, transparent with my wins, transparent with the losses. The losses are in red. The little targets here are assignments, most of which we've got out profitably, as a matter of fact. So you can see a lot more wins than losses. Obviously, past performance is not guaranteed for future results. And these are just for purposes of example. It's not to copy trade me or anything, just for inspirational purposes. If you want all of these daily trades, the private morning live streams that we do for about an hour, sometimes up to 2 hours every single morning, all my trade idea setups, the wheels, the calls, the call debit spreads, the leap contracts, the long-term portfolios, even real estate, and chat with me all throughout the day about anything you want about your stocks, your options, and all that, and want my opinion. I'm there for you guys, and the link to the Discord is down below if you're interested. So hopefully to see you in there soon. And if not, well, I guess I'll see you back on the channel, guys. Take care, see you tomorrow, and peace.